Next question. A company needs rupees 31 lakh 25,000 for construction of a new plant. So information is given that say there is a company which requires an amount of 31 lakh 25,000 for construction of a new plant. The company issues 1,56,250 ordinary shares at the rate of rupees 10 and 15,625 debentures of rupees 100 denomination bearing 8% rate of interest. Income tax rate is 40%. What will be the earning per share if expected EBIT is 62,500 and if expected EBIT is 2,50,000? That is a question. I request you to go through the question, please. So, friends, we are required to make the calculation of the earning per share or loss per share. That is the way we have to understand. So, write an answer. Calculation of earning per share or loss per share for each level of EBIT. As far as earning before interest and taxes is concerned, in the first case it is 62,500. In the second case it is 2,50,000. Less interest. The question is providing the information that say we are going to issue 15,625 debentures having face value of 100 and the rate of interest is 8%. So 15625 into 100 into 8%. That comes to 1,25,000. So EBIT minus interest. With that we get profit or loss before taxes. So in the first case it is loss of 62,500. In the second case there is a profit of 1,25,000. Income tax. We understand that say when there is a profit of 1,25,000, then in that case the tax is required to be paid at the rate of 40%. So 1,25,000 into 0.4, that comes to 50,000. Profit or loss after taxes. That comes to 75,000. The same will be divided with number of equity shares. Number of equity shares are 1,56,250. So profit or loss per share. It will be found as 75,000 divided by 156,250. 75,000 divided by 156,250. That comes to 48 paise. So this is 48 paise. So accordingly we are required to make the calculation of the answer. It is 48 paise. Now see, in my opinion, doing working till this point of time is not something which is great or very difficult. Now the important point of the question starts. What happens that's over here, say we are having a loss of 62,500. Then what about the tax? Now to explain that, say I am taking some example with you like this. Dear students, you are required to have understanding of the some taxation rules just to make the calculation over here. Let us say that there is a company called ABC Limited, and let us say that this company is having production of the two products A and B. Income tax rate of the company is 40%. Manufacturing of the product A has a profit of 5 lakhs. Manufacturing of product B, say, having a loss of 2 lakhs. Then in that case, what is the amount of the tax that ABC Limited has to pay? If you think that, say, 5 lakhs into 40%, tax is required to be paid of 2 lakhs for A, and let us say that, say, this I am taking 1,50,000. And you don't have to, say, pay any tax for manufacturing of the product B. If you think like this, then it is not like that. What happens at the income tax department says that, say, we treat ABC company as a whole. So for with manufacturing of one product, you have a profit, and with manufacturing of the other, you have a loss. Then you are required to calculate the overall. Overall, it is 3,50,000 into 40%. So 3,50,000 into 40%. That comes to 1,40,000. So instead of paying 2 lakh, you have to pay tax of 1,40,000. In a way that, say, technically it is called that, say, the loss of 1,50,000. Loss of 1,50,000 will be set off against the profit of 5 lakhs. And you are required to make the payment of tax on 3,50,000. This is what we understand. So this is given a technical name as, say, the set off of the losses. So basically we understand that, say, 40% of 1,50,000, that comes to 60,000. Technically it is called, you get the advantage of the tax saving of 60,000 rupees, and instead of 2 lakhs, you have to pay tax of 1,40,000. This is what the concept is. And suppose there is a company called XYZ Limited. In the first year of the business, there is a loss. Let us say the loss is an amount of 1,40,000. So what is the amount of the tax that you have to pay? 0. In the second year, let us say that, say, you make a profit of 1,80,000. Then are you supposed to make the payment of tax of 72,000? Sir, how 72,000 is calculated? 1,80,000 into 40%. Is it like this? Then again the answer is no. You don't have to pay tax like this. Listen carefully. This 1,80,000 minus 1,40,000. On 40,000 rupees, you have to pay tax at the rate of 40%. That comes to 16,000. Yes. There is a provision which is given a name as carry forward of the losses. There is a provision which is given a name as carry forward of the losses. So this 1,40,000 rupees of the loss will be carry forwarded in the subsequent year, and say 1,80,000 minus 1,40,000, on 40,000 you have to pay tax at the rate of 40%, and that comes to 16,000. Yes, you don't have to pay tax of 72,000. This is given a name as, say, the carry forward of the losses. Now let us come back to the point. Now whether this company, which has a loss of 62,500, will be carry forwarding the loss, or will get the advantage of the loss tax saving immediately because of the other businesses. For that, say, as such, there is no clarification in the question. However, in that case, say, we will consider that, say, you will get the advantage of the loss tax saving immediately. We are having, say, a kind of consideration that, say, the company will get the advantage of loss tax saving immediately. So what will happen? 62,500 So we'll get the loss tax saving advantage immediately, that is 62,500 into zero point 0.4, that comes to 25,000 positive. Be careful, this is positive. So 62,500 minus 25,000, that comes to 37,500. So loss after taxes is 37,500. Same number of equity shares divided by 156,250, it is loss of 24 paise. 37,500 divided by 156,250. This is the way we calculate the answer. I request all of you to write down answer. Yeah, write down a note for the answer. First one, write down. In case of loss, there are two types of provision. A, set off of losses. B, carry forward of losses. Second point, in absence of any information, it is assumed that company will get advantage of tax savings immediately. Full stop. So loss after taxes will be reduced.